Yep. We
Hey,
just, like I
Paul,
said, we just got one of the cats fixed. We just picked him up this morning. So he's in a whole different world.
was that the picture you sent?
No, that was a different one.
Oh, okay. You have like 24 or something like, right?
We have farm cats. So we've got 11 or 12 running around here somewhere.
Yeah, okay.
But they're all unique in their personality. And Jan, when
Yeah.
they show up, Jan will feed them. And 'cause she says she's got a scourge of helping animals. So that's what she does.
Yeah. That's
So
pretty
I think our cat food bill is higher than our regular food bill.
Yeah, that's
But
the thing is like we're used to a certain probably like amount of money we spend on dog food. With Indy, she was like 30 pounds. And our daughter Haley has a golden retriever and she's like 65 and she's only 18 months old and she eats like double what Indy used to eat. I'm like, well, if we get a bigger dog, we're gonna be feeding another human being.
we get weekly packages from Chewy, these big boxes full of cat food.
Yeah,
So it's better than me having to go buy them.
right. It adds up quick for sure. No. How are you guys?
Talk about talk about inflation,
Ugh,
cat food inflation.
it's insane. Oh. How are you all doing?
I'm doing okay. Speaking of dog food, I just started it's called Badlands Ranch. I don't know if you guys heard of that, but my
No.
dogs just love it. It's a mail service subscription that you can get. And my dogs, it's a dry formula.
Uh-huh.
They never eat anything dry without mixing it with something wet
Right.
or human food or something. And but they'll eat this stuff just as fast as I can eat it, feed
It,
it to them.
it's called dry lands,
Oh, ranch lands.
ranch lands.
Yeah,
Right.
ranch land.
Gotcha.
Kathy Heigl, I don't know if you know who she is. She's an actress. She's been in several movies and TV shows. I didn't know who she was, but my wife did. But anyway, she's behind it and started it and everything.
Who is that again?
Catherine Heigl.
Oh, okay. No, I'm
Yeah,
not. I probably would see a picture of her and I would know recognize her. Yeah.
but I'm my second month on it, and they just can't get enough of it.
But
It's pretty expensive in my mind, but
yeah.
I was feeding expensive stuff anyway, and they all just have more energy and more pep, and one of them doesn't need any more of that.
Right.
I've had dogs like that too.
Yeah. No, I after I started to think about like what you feed your pet and how they process that food, and you're like, oh, you
Yeah,
know, but you also pay for it. So
Well, out here, let my dogs out or the cats, and there's always something dead they're eating. So, you know,
it's natural.
yeah, they eat whatever,
Right.
and one of my dogs, came back with a deer leg once in his mouth. So
Oh God.
I grabbed it, hit it, and he found it again. So then I threw it up in a tree so he couldn't get it.
Oh well. When I was a kid, we lived in Minneapolis, Minnesota, out in Hastings, which is out in the country. We had this half German Shepherd, half Norwegian Elkhound dog. She was a big one, and we let her roam. And she one day came back with a wolf, like a dead wolf, and drug it into the
Oh yeah.
front yard, and was so proud of it.
yeah.
And I remember my dad was like, uh, um, he was like, you can't keep that. So,
Yeah, Jan learned the hard way to before she opens the door, let a cat in to make sure there's nothing in its mouth.
yeah, yeah,
So, well, I'm gonna get going because we got a
okay.
lot of stuff. This has been an interesting week to say the least. So, welcome to the our Zoom call for the Platinum Channel. And normally we go over market conditions for the week and we look at charts, and then you guys tell us all your successes and questions, and we look at more charts, and then we have a great weekend. This has been a good week to be a swing trader, and it's thanks to basically three things. And the first thing was the CPI report came out and the market went nuts. So the annual inflation rate in the US slowed to 3.2%. It was expected to be 3.3%, so 1/10 of a percent below the expectation. And we saw what happened. So when you dig down into it a little bit, you look, the energy cost was probably the biggest part of the CPI going down. Energy cost dropped 4.5%. In September is only 0.5%. Gasoline declined 5.3%. Gas services fell 15.8%, and fuel oil sank 21.4%. There was a slower pace of increase for food. Food went up 3.3% versus 3.7%. Shelter 6.7% versus 7.2%, and new vehicles 1.9% versus 2.5%. And we had decline in used cars and trucks. And on the other hand, prices rose faster for apparel, medical care, commodities, and transportation services. Compared to September, the CPI was unchanged, the least in 15 months, and below forecast at 0.1% rise, mainly due to lower gasoline prices. So the markets went nuts. I think the morning of the CPI, when it came out, I looked at the futures and I put out something on the blog that, check your limits because you're going to have to raise them if the futures continue to hold through into the regular market, which they did. Again, so Wall Street rallied on Tuesday. The S&P gained 1.9% Tuesday. The Dow popped 490 points. NASDAQ went up 2.4%. And it's all this, the hype, I call it the euphoria of, rates are now they're going to stop raising the rates. And we're actually going to see, I think now the futures have it marked in by next March or May that we're actually going to lower rates. And this is, like right before, last week Powell was talking and he said he was not confident he had done enough to bring inflation down to 2%. So I find it was good for us as swing traders because it popped us over our resistance level and made that support and gave us a couple extra points on gains. But as far as, how the market matches the economy, we've already talked about how they're not connected at all. So I want to get a little perspective on how I see the CPI. Consumer price index is still running well above the typical pre-pandemic rate. And the cost of things like food, gasoline, rent, and childcare remain far more expensive than they were a year ago. Okay, so chronically high prices are forcing most Americans to spend about $650 more per month than they did 2 years ago, according to a recent estimate from Moody's Analytics. October inflation data showed prices for many goods remained abnormally high for millions of U.S. households. Housing costs were the biggest driver of core inflation last month, with rent rising 0.3% for the month and up 6.7% from the same time last year. And grocery prices climbed 0.3% over the course of the month and 2.1% year over year. So we're still seeing, prices go up. And I was watching, I think I was telling Trent, I was watching this Fox Business, and one of their analysts was saying, that inflation is zero, and she's like, no, it's not zero. It was just even with last month. It's still up. So we still have inflation going up. It's just not going up as fast as it has been going up. So be careful what you listen to and how they interpret it. But you can see what happened to the market. So additionally, Americans have received basically a pay cut over the last 2 years thanks to this high inflation, according to the U.S. Department of Labor. They reported Tuesday that the average hourly earnings for all employees was $11.05 in October, a 3.32% decline from the $11.43 figure in January of 2021. So here we have a market, a stock market that is euphoric because we're going to have, they think it's going to be the end of rate increases, which I have not heard the Fed say yet, and that we're actually going to decrease it. So I just wanted to do a little search of what the Fed governor said this week, and this is what they said. San Francisco Fed President Mary Daly said Friday that the U.S. Central Bank might consider raising its benchmark lending rate again if progress on inflation stalls while the economy continues to surge. Atlanta Fed President Raphael Bostic said that policymakers can bring U.S. inflation back to their targets without the necessity of further interest rate increases. Monetary policymakers may need to take more forceful action than otherwise to keep inflation expectations anchored when it's unclear how long high inflation may persist, Federal Reserve Vice Chair Philip Jefferson said. Chicago Fed President Austin Goolsbee welcomed the latest data, indicating a decrease in U.S. inflation, but emphasized that there's still a ways to go before it reaches the central bank's 2% target. Inflation falls. This was kind of the one I really liked. It was from Waller. Inflation falls, but prices don't come down. They're just going up at a slower rate, Fed Governor Christopher Waller said last week. What people have in their mind right now is prices go back to where they were in 2021. That's not going to happen. These prices are probably here forever. Richmond Fed President Thomas Barkin said Wednesday that he remains unconvinced that inflation is unequivocally heading towards the central bank's 2% target, despite acknowledging real progress in curbing price pressures in recent months. I'm just not convinced that inflation is on some smooth glide path down to 2%, he said. So, you know, it's kind of I look at this and the market goes crazy on one point because, you know, and they've done this, I don't know how many times. I saw a presentation the other day, 7 times, I think, that the market has done this euphoric, thinking that the Fed's going to stop and start moving rates down. And that really hasn't been the effect. And I don't really see a lot of the Fed governors saying that yet. So the party may not be quite as large as we think, but we'll see. The other thing that happened at the same time that helped the market spike up was the government shutdown was averted. The U.S. House of Reps passed a temporary spending bill that would avert a government shutdown. It had broad support from lawmakers on both parties. And I think that the president signed it into law yesterday or this morning at some point. And then the third thing that helped, which is probably one of the largest things, again, is treasury yields. The yield on the 10-year treasury note fell below the 4.45% mark, approaching its lowest since mid-September, as new economic data strengthened the argument for the Fed to refrain from delivering further rate hikes in the current cycle. So that's been the news line is, you know, what's going to happen to make these rate hikes stop or go down. And again, we talked about it last week. Typically, historically, when the Fed starts lowering rates, there's something wrong, and the market might initially go up, but typically following a rate increase, you see the market dip historically. So those are my 3 looks at what we're seeing in the market today. Let's look at the rest of the market conditions that I look at real quick, and then we'll open it up and let you guys talk about what you think. So Moody's last Friday lowered its rating outlook on the United States government to negative from stable, pointing to rising risk to the national fiscal strength, meaning we have too much debt, we're not paying it off, and the interest rates are going up. Now we're paying $1 trillion a year on interest alone. Consumer sentiment. University of Michigan's gauge of consumer sentiment fell to a 6-month low of 60.4 in November, weaker than expectations of 63.7. In addition, the University of Michigan's November year-ahead inflation expectations rose to a 7-month high of 4.4%, stronger than 4%. Then small business sentiment came out. U.S. small business sentiment fell for a 3rd consecutive month in October. The National Federation of Independent Business Index fell to 90.7 in October from September's 90.8. The fall keeps the index below its 50-year average of 98 for the 22nd straight month, as the net share of businesses reporting higher profits fell 8 points from September to a net negative of 32%. Then we talk about industrial production. Industrial production in the U.S. fell 0.6% month over month in October, the most in 4 months, and more than market expectations of a 0.3% decrease. Manufacturing output, which accounts for 78% of total production, dropped 0.7%, also more than forecast of a 3% or 0.3% decrease. So we're seeing our manufacturing output and production going down, and automatically you think, well, if we're not making as much and these indices are going down, what's happening to unemployment? So when you look at jobless claims came out, the number of Americans filing for unemployment benefits rose by 13,000 to 231,000, the highest in nearly 3 months, and well above the expectation of 220,000. In the meantime, continuing claims rose by 18,000 to 1.8 million in the previous week, the highest in nearly 2 years. So it's looking like the effects of higher interest rates are probably starting to hit into the employment situation, which is what the Federal Reserve wanted to see anyway. Then on retail sales, you start looking. Retail sales report came out. Consumer spending, of course, is over 60% of our economy and GDP. Retail sales decreased by 0.1% month over month in October, putting an end to a 6-month streak of increases and compared with the market consensus of a 0.3% decline. So again, we're seeing retail sales go down where they've been going up. Now, one point of data is not a trend, but when you start putting the dots together with what else is going on in the economy, it's interesting to make your own assumption. To kind of back up retail sales, we had a lot of reports this week, and the three that I looked at: Home Depot, Walmart, Target. And a lot of these came out, and they had not so bad as far as the earnings, but it was their guidance that kind of made the difference in the markets. So Home Depot indicated caution about the coming months as it's narrowed its full year outlook. It said it now anticipates sales will fall by 3 to 4% from the prior year. Home Depot expects earnings per share to slide by 9 to 11% compared to the prior guidance of 7 to 13%. Walmart declined 6% after the company expressed concerns about the outlook for consumer spending. Walmart said that the U.S. consumer continued to exert caution with their spending in the face of inflation and rising interest rates. With higher interest rates kicking in and household savings dwindling, sales have been somewhat uneven over the past 2 months, executives noted. Walmart's bigger focus on groceries has provided them a bulwark against the broad slowdown in discretionary spending, with more than half of the company's merchandise comprised of food and other daily essentials. At Walmart, groceries are up by a mid-single-digit percentage compared to last year, but still elevated by the high teens percentage compared to 2 years ago, Walmart CEO said. So they're not really selling the big ticket items. What they're selling is food. And you can see that with what Kroger came out with, that Walmart is doing much better. When you look at Target, they don't focus so much on food. Target on Wednesday topped Wall Street's quarterly sales expectations and blew past earnings estimates as purchases in high-frequency categories like food and beauty helped prop up weaker consumer spending. Shoppers aren't buying much more than the necessities, the CEO said. In the fiscal third quarter, Target's total revenue fell from $26.52 billion in the year-ago period. Comparable sales dropped nearly 5% year over year as customers bought fewer and fewer discretionary items. Digital sales declined by 6% compared to a year ago. So we're looking at, and I think Trent, you wrote something about this when the retail sector came out with these, and so they're not looking at a really good Christmas coming up. And remember, last week we talked about Maersk, which is the second largest container ship company in the world, laying off 10,000 people before Christmas with less demand. So again, we're just connecting dots. So probably the bright spot from this week are a couple things. Crude oil inventories rose by 3.592 million barrels in the week ending November 10th. And so the prices of crude have gone down. You've seen that in the pump. You see that in the CPI and PPI. That's what caused the CPI and the PPI to go down. And then we had mortgage rates. So with the interest rates coming down, the average rate on a 30-year fixed mortgage was 7.46%. A couple of weeks ago, we were talking about close to 8%. So it's dropped for the third consecutive week and 35 basis points below the 23-year high from the end of October. So again, we're seeing this correlate with the treasuries and the 10 years coming down. And the last thing I wanted to talk about is we talked about the treasury auction, and we're going to have another 30-year treasury auction coming up. We talked about how that was a horrible auction last week, and I think someone brought up, the cyber attack on the bank, and so I followed up a little bit on that. It was a little bit worse than we thought, and they were actually kind of worried about it because they were worried about the covering of $9 billion. So the cyber hack of Industrial and Commercial Bank of China's U.S. broker-dealer was so extensive, even the corporate email stopped working and forced employees to switch to Google Mail. According to two people familiar with the situation, the blackout left the brokerage temporarily owing Mellon, of the Bank of New York Mellon, $9 billion as an amount many times larger than its net capital as measured as a measure of resources at hand to promptly satisfy claims. They didn't have that money. $9 billion they owned the Bank of New York Mellon. Those details show how the ransomware attack pushed the firm owned by China's largest bank close to the brink. And they served as a wake-up call for the financial sector and raised some concerns about the resilience of the $26 trillion treasury market. So what happened is they had an emergency wire from China that came in and paid back the Bank of New York Mellon $9 billion, but they sent the orders through, but they didn't send the money. And something like that is all it takes to really kind of crash a system. So it was a lot closer than we thought when that happened. So that's kind of I tried to do it quicker this week and all at once. And so that's kind of how I saw the market. So today we're flat on the market. Dow's down 14, Nasdaq's down 4, S&P's up 2. Just kind of quiet, just sitting here. We'll show you a chart here in a minute and see how I look at the market. But after all that, really quick, what do you guys think?
I see it as a calm before the storm. You know, when you have a country that's based on consumer spending, and your big retailers are coming out saying, we're looking at probably flat growth at best in the coming months, coming quarters. I mean, that to me is an indication. You look at the slowing of the housing market. You look at the cost of borrowing money these days, especially for small and mid-sized businesses, are spending over 10% on credit lines. And to me, it's sort of like, okay, that's the foundation of the house. It's now becoming liquefied. When does it get so liquid that the first floor comes down into the basement, and what will cause that? And I think that's, it's a matter of time to some level. The problem is, and you have said it a number of times, that the market is not the economy. And at some point they do cross paths, as we've seen in, the great financial crisis, the dot-com bust, throughout history. But it's a matter of, at this point, this was an excellent week for swing trading. So how do you, I think it's just becoming more and more aware that the foundation for our system is weakening, but play with caution in a sense, I guess that's my take.
The key is, it helped, I looked at it as this is going to be great. Once it popped up, I get to move all my limits, my support and resistance. But then again, you still have to use the technical analysis, where your supports and your resistance are. You still have to use your oscillators. They just adjust, so keep your psychology out of it, and the opportunity to, the FOMO and follow this, keep that in check, watch your charts, and you'll do pretty good. And I'll show you some of the things that I did and some of the things I should have done, coming up here in the charts. So anything else? I mean, it's gone on in as far as the market conditions this week, you guys want to comment on? Paul, what did you see?
I think all my limits triggered on Monday, so I didn't pull them up high enough. Yeah, it's fine. But I scratched my head because, basically all the information that you provided indicates the market should be going down, except for the beginning of your the beginning of how you spoke. You mentioned a few things that drove it up this week and caused all of your all the hoopla. However, I mean, the stuff that you just indicated, all that other stuff is indicating, it's like you said, the storm is coming and the market's going to fall. I mean, that's what Trent alluded to. So I scratch my head and watch. I think I like to look at the sectors in which some sectors are going to do better than others.
Yep.
So, you're not going to go to the used cars right now, or you'd be careful about retail. I was just quickly looking up retail, by the way. 40% of Walmart is in other parts of the world. So we got to, I try to focus on the hotter sectors, the ones that are doing better than the entire picture. But
No,
you're
that's
teaching,
good.
Yeah. So, but also learning a lot from yourself and the group about how to read the technicals. Like for instance, today I came in and I had the limits up and I'm like, these technicals aren't looking good. I think I'm going to pull out for the weekend. You kind of sleep easier when you're into these swing trades. You don't want to bring them into the weekend. You don't know what's going to happen during the weekend. But again, like some of these, I mean, you see the event that Microsoft where he had Jensen Huang in NVIDIA. I couldn't believe the stuff they're doing. So I treat that a little bit differently. There's the market conditions and there's the company and the sectors and who's doing well. And then there's the market and there's the market psychology. So it's a big mix of things.
Yeah, there's fundamentals and then there's technicals. And then there's market conditions, known and unknown, like
and
this
psychology.
weekend, you could have you buy a stock and it's looking good. And then right after market close, some securities guy comes out and downgrades your stock. And the next, Monday morning, it's down 20% out of nowhere. That's an unknown market condition, which kind of keeps me out of the market on weekends if I have. I prefer to be out over the weekends, like you just said.
But for like core positions, like I looked at Palo Alto, and I've always been a cybersecurity kind of watcher, and I watched the Kramer had him on, interviewed the CEO, and I'm like, this is a great company. I've watched it for years. They're the biggest in this sector. And I've always wanted to get them. I've had them before. They've done well for me. I watch them and then I sold them off and I'm like, I wish I was in. Or CrowdStrike's another one that I have to look into a little more. So when it got hit based on, they said they lost, their customers weren't able to pay for these subscriptions because of higher interest rates. So it was all tied in. And I said, it's a billing problem. So I waited for it to dive this week and I bought it at the low and then it was up 3% today, even with the downgrade. And I'm like, I think I'm doing okay. I mean, I watched this stock. So
one thing I do when I like a stock, and you guys know I like Berkshire, is I have a core position of Berkshire, but I like that's off to the side and and somewhere else. But I like to swing trade Berkshire because, like you say, you've watched it, Paul. You know the company, and so if I get stuck, which I normally don't because I have tight limits, if I get stuck with Berkshire, I'm happy with being stuck with Berkshire because I know it'll come back. So that's the way I kind of look at it. But then there's the swing trade swings like PAGs and things we did this week that you don't want to do that. You don't know anything. I don't know what they do. And a lot of times when I give you guys the list, I have no clue what they do because I'm just looking at technicals. Okay, because we're focusing on swing trading. And so that's what I look at. Now I will look and see, do they have earnings coming up or dividends or something? But normally I don't go in and do any of the fundamentals on the swing trades. So, but you do have to do that. I mean, it's a mix of fundamentals and technicals also.
Yeah, it helps me with my swing trade to know the sector in because I looked into, is it PAGS, and they're cranking because a bigger company, and I want to say there's Stein or STNE or something like that, they crushed earnings. So that's why PAGS is just following along. There's so much, that sector's drawing in. It's pin action, like Kramer would say, right?
Yeah.
Yeah.
I had no clue that was until you brought that up. All I saw was a bunch of points on a chart that met my guidelines or were going to meet it. And so the chart told me that without me even knowing it, this way I look at it, Paul.
Yep.
And we'll look at PAGs here in a second. I just want to make sure everyone has the opportunity to So did you make some good money this week? Anyone? Paul, you probably made some.
You're on mute.
Oh, yeah, you're on.
All right,
There you go.
sorry about that. So now I got a spreadsheet that I'm keeping, and I love it because the technicals and the strategy, the way I track these smaller swing trades, I'm starting to apply to my bigger core positions. Like I had a
Yep.
lot of Oracle and I was up okay, but I've said, I'm looking at Oracle, I'm not too crazy about it. So I pulled out of it, and I made a gain, but I feel more comfortable with that versus another company that I like. And then I look at the charts, and if it's not doing well, I'll pull out. So I guess long story short, the swing trade technicals that I'm getting, I'm applying to my core positions.
And that's good. I do that too. Yeah. Because again, what we don't want to do is get caught in a long downdraft of when the market does, or a stock individually goes down and gets hurt, that you're down for 12 months and you're waiting 12 months for your money to come back to even. And that's a lost opportunity cost on your money. And we don't want that. We want to be out during that time, even if you like the stock, And I think Robert said it well last week. Robert said, I used to be kind of a buy and hold kind of guy. And he switched his philosophy. It's like, I buy and I hold, and I got, X amount of my time that I hold it, it's under my price, and I could be putting it in treasuries or something by using what we use here, looking at charts and things. Charts aren't 100% reliable all the time, but they sure do give you a better advantage than just, throwing a dart, which a lot of people do.
Yeah, that would be me a year ago. I'll do fundamentals more. I'll be like, okay, this sector is doing good, do some research, but not the chart.
And that's not bad, because we've talked, money just doesn't go away, Paul. It flows to where value is. So it flows from sector to sector, or to commodities, or, to treasuries or T-bills. And we just got to kind of figure out where that's going. And again, I got a few things I'm looking at. I'll show you here in a second, but I just wanted to get everyone's thoughts. Anyone else have anything on market conditions or fundamentals, or before we go to charts? I don't see anything.
Go ahead.
All right. Well, let me go and take a look at the market in general here. All right, this is the SPY S&P 500. Again, this was October, and then we hit November, and here we go. And then we had this week, and CPI came out. We gapped up. You're looking at a lot of gaps in this chart. Gap, big gap here. And then we came up, and here's my favorite little intermediate resistance line. And we hit it, and that's where we're headed. Now we'll have to see if we can get over this. There's some cells above it, but for 4 days, we've just been going sideways on this. You're starting to see just a little bit of a flattening out, maybe curving of the histogram on the MACD. These are still high, and they'll be flat because they're at the top. But we'll see what happens. But I see this on a lot of charts. Apple looks the same way. There's just a lot of charts that look this way. But this resistance line is normally a place. If I were swinging SPY, it came up here and hit that, I would be out at that point as a swing trader. Let's go look at the Dow real quick. See what we got here. Same kind of thing. Here's October. Oops. Here's December. Here's our resistance. Boom. Starting to see just a little bit of a bending over the MACD. Seeing the histogram kind of, the lines are getting closer. Seeing a little bit in the Dow, the RSI tinkling down just a little bit because we're down. But again, a couple of days of flat right along the resistance line. And then let's go over to the Qs. NASDAQ. Same thing. And again, got gaps on the Dow, not so much, on the NASDAQ, we do have gaps here, gap up here. Gaps tend to be filled, especially on indices. But again, about 4 days of kind of sideways, deciding if it wants to break through this resistance level or not. So, I look at this, I saw that gap and I'm like, wow. And then we went sideways. Now we're coming up on a weekend. So again, this is another reason why I like to be out on a weekend. I don't know which way this is going to go, but I'd rather have my profits, like Paul said, sleep well, have a couple beers and a steak, and worry about it Monday morning. I'll look at the charts when the markets close tomorrow. Today they'll close. I'll look at them tomorrow, see what the setups are, and throw them back on the horizons list and everything that we watch. And we'll go one we normally don't look at, but got some attention this week is the Russell, the small caps. And you can see the Russell was like a major gap here. We had a gap here that got filled, another huge gap. And you can see the Russell has gone up and actually passed through its resistance, kind of went up to actually the 200. And now we're going sideways on the Russell too, but we're starting to see stochastics rolling over a little bit. We'll see what happens with the Russell, but that was kind of interesting too. Let's see, because if the Russell goes, you're not seeing the Microsofts and the Mac, the Magnificent Seven in the Russells. So we'll have to watch this a little bit and see. But again, it's going flat too.
And that's under that's under the 200 day, where the other three screens you're over the 200.
Exactly. Yeah. They've been under since about September. Back in here. Let's take a look at what else do I got here? Let's go to our watch list. Okay, I can find it here. Hold on. Okay, here we go. Yeah, let me get you guys in here so you can see it. I'm not talking blindly. So with the market going up in November, it's a pretty good week. I finally got out of Berkshire, and I'll show you that, why I got out and how I should have played it better. We were in SLM Corporation, which, it's a small numbered stock, and actually got out of that because it hit a sell limit above the cost basis, only made 3 cents a share. Okay. But we didn't lose. So, and you can see when I talk about the morning watch list in the morning, I'll go over the stocks that are in the paper trade portfolio and where the resistance and support levels are, and kind of give you an idea of what my thoughts are when I would get out. And I did say I would probably get out above cost basis because I wanted to make sure I had a gain on that. And then Google, we got out of Google also. It hit sell limits at resistance, and that was yesterday also. So we'll take a look at a few of these. So basically, we were up 3 cents on SLM. Google, we were up $4.50 a share, and Berkshire was up $14.27. So that was $18.80 a share total on this week's watch list. And I want to go back and we'll take a look at Berkshire and what I did wrong or what I could have done better.
You made money, no complaints.
No, but you always want to go back, kind of like you do, and figure out. Okay. I see that.
Yes.
Mm-hmm.
Okay, so here's my cost basis when I put it on the list. You can see it came and we had a 1 candle close above the 9. So I actually saw before market close this was going to do that, and I caught a little bit below the close level. Next day, nice day. Next day up, nice day. Next day we came up, hit basically the 50. Then it was the weekend, okay, and they do the earnings on Saturday, and I normally get out before earnings, but I didn't because it's Berkshire. Kind of like Paul, I know this company, and I know better than the chart. Well, earnings came out, and the chart came down. I was still above my cost basis. Came down, hit the 20th support, stayed in, hit the 20th support, stayed in, started rising up. When it came up here and it hit basically right where earnings went up to, it hit the upper Bollinger Band, and that's where it hit my sell limit. Okay. So I only made, $14.27 a share, and it's gone up a little bit more, another, where are we at now? 358. So anyway, when it's on this side of the Bollinger Band, the lower side on the uppers going up, it can go up for a while. it's when it starts trading above the Bollinger Band that you're probably going to see a pullback underneath. So what I should have done, and I've done this before, is sold half my position and kept the other half, and then come up here and I would have had a little more because I would have sold today because it's Friday probably. I'm seeing a little bit in crossover. So it would have made me a little more on a half position. But like Paul says, you got to be happy with the profit. But there's always ways to learn, you know. Let's look at Google here. So Google, we got in back in this area right here. Here's our cost basis. Went up, got above the 50, came back up. This was yesterday. It hit yesterday. It hit basically the intermediate resistance. This line was actually lower yesterday. These things move, and so I hit a resistance level here, and that's where it got out right here. And you can see today it's below where I got out. So that's why I like using these lines. This resistance line was lower yesterday, and they move as you know the days and they calculate. And then you look down here, we're seeing a stochastic, we're seeing an RSI go down. So that was a pretty good trade for $4.50. And then this one was kind of a
Quick question.
yeah.
On Monday, when you bought it, as soon as you buy it, or as soon as when I buy it, I usually put in the stop loss and the gain limit.
Yep.
Did you put one in for Google on that Monday?
I put one in on the low side,
So we're
and I can't remember if I put it in at the 9 or the 20. It was one of those two.
And then the high side at the 50, maybe?
You know, I didn't put one in on the high side on this
Oh.
one. I let it run. I thought and sometimes I'll do that. I won't put it in on the high, especially when the lines are pretty close, you know?
Yeah.
And I'll just see what happens. This one popped over, and once it popped over, I'm like, okay, now that's support. So that's where you would move your sell limit up to this point, you know, or you could keep it at, you know, a little bit above wherever your cost basis is, however much you want to make. But that's kind of how I do it. But you could put in both if you want, you know, that way you know exactly what your risk on the bottom side and what your gain on the top side is going to be.
Yeah, I've run into a
Did I
habit
answer,
of putting.
your question? Okay.
You did. I'm asking myself if I should start. Oh, another thing. No, another question just came up. Many trades, I miss it by just a fraction of a point. Like, you know, I try to get in and I consistently miss it. And I think that might be because I'm a bit conservative and I don't want to pay more than I could have paid. But I'm just speaking
Yeah.
out loud to myself because in taking notes, I write that down. I didn't get the trade, not executed because this occurred. And I, you know, go on the chart to see where it might have triggered. Oh, you know, how I missed it. But yeah,
I did
thank you for
that
the
on,
yeah.
I did that on Monday. I put an order in for the PGAB or whatever that was, and put
Thanks,
it in
yeah.
at, what was it? Something like, it came down to whatever the first number was, 0.83, and I had it in at 0.8, and I totally missed it, and I didn't go chasing it. But now looking back, I'm like, should I have just put it in at, you know, at the high end of the pre-market and picked it up?
What price did you put it in?
I put it in at what was it was a 8.
Oh, that's pretty good because I have 7.5 on I tracked here, which is
Oh,
crazy
hold
low.
on, let me take a
Crazy
look.
low. But it went haywire. It went really up fast on Monday morning.
Mark and I were
Like,
going back and forth on it. I forget what I put it in, but it was like 3 cents below where it came down to, and I was like, I totally missed it because I wasn't looking at it in the morning.
so that's, do you have Monday up, Mark? Is that Monday?
Yeah, this is today, Thursday,
Let me
Wednesday,
see here.
Tuesday, Monday.
So it traded between 7.12, is that right?
This is 7.77 here. And this is 8.47.
So I had 7.5.
Yeah. See, I
Monday?
set a limit to get out at the Bollinger Band.
So
and then it just kept rolling. But I see that, again, not always, but a lot of times it gets above the Bollinger and it'll reset because it's overbought on top of the Bollinger.
yeah.
And it did, because look at the Bollinger here on the low side. It just keeps, chugging along on the bottom side. Never did, except for here, really get underneath it.
So
So
you set your sell limit at the Bollinger Band
I
on
did
that one?
right here. Yeah.
Mm.
But
Yeah.
that's okay. I got what I needed.
Yeah.
This would have been nice, and then had I not done that and wrote it up, I would have set it. I'm not sure where where the cells were on that day, but I
Mhm.
would have set it here where the cells are. And then of course, right here you've got intermediate resistance and the 200. That's just a lot to get by. Let's go back and just look at Google here for a second.
Yeah, I had put it
And
in at 7.80,
yeah,
and at 9:45 on Monday, Mark says, looks like you missed it by 1 penny.
yeah. And you're gonna do that, and it's gonna
Yeah.
happen. And you just,
Yeah.
I was
Well,
just
and-
looking at Google. Go ahead.
Go ahead.
I was just looking at Google, and here's our intermediate resistance line, and just go back in history sometimes, and you look, and you can just see where it boom, 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 boom. Then
Yeah.
it gets above it a little bit. It gets up to where the cells are, boom, 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 then down. So here we are again. That line is almost a gold standard for me, as far as getting out. And
Yeah.
sometimes it goes fast, but for the most part, this has saved me a lot of money. One of the
What's that
things,
line? What's that
that's
line?
the intermediate resistance that my program has. It's
Oh.
that Active Trader Pro has.
I have it. I'm trying to see it where it is on your
It's this
tab
one's a
up
one.
there.
Oh, you come up here in the technical analysis, support and resistance,
Yeah, I have that. Okay. Okay.
and then you set it, and you can actually get into it. Oops, and modify it if you want. I keep mine at intermediate, but let's move it to short. See, short didn't do anything. Let's move it to long. Long didn't do anything this time either. So it'll tell you, here's your resistance and here's your support. It's a nice tool.
Excellent.
I like it. And here's your support right here, the blue line. And you can see, you come down, you play around that line too. Here it really went under because of earnings. So I would get out before earnings. And then it's come back to about where earnings was. So that was the watch list. Let's go to
Hey, Mark,
yeah.
regarding Google, swing trading or long term, does it matter which Google you're swing trading or holding?
I don't. I always just do this one. I don't think it does because what's the difference? Voting rights?
Yes.
Is that yeah. I just use this one. Let me go back to
Without the L?
yeah. Let's go back. We'll just do a comparison of the charts. So here's Goog, and then we'll go Google. And if it comes up, see, it's almost came up, still hit the resistance. I don't know. The chart you trade is the chart you trade.
Yeah.
So if you
Looks
trade
exact
this
to me.
chart, it may be different, but you're still got the same. You've got the same moving averages. You've got the oscillators. So you just trade the chart you trade. This
All
one
right.
here, basically under here would be confirmation right here when the MACD crossed. And that's technically where my trading rules say you would have got in here on this one and wrote it up, and I would have got out there. Some people, if it just goes over the 9, I like to get confirmation here. I've been burned before where it looks like it's going to go on the MACD and it doesn't. Even if you see the stochastic going, it just doesn't. And then again, the RSI was at 45 back then, so I would have waited till that point, just the way I trade. I try to stick to my trading plan as close as I can because 9 times out of 10, if I get away from my trading plan, it screws me up. It comes back to bite me.
I hear you.
Let's take a look at just these real quick horizons lists. These were really good this week because the market went up and helped us. And again, the horizons, I just on these, I just go between support and resistance basically and let the chart run itself. But we had 6 in the horizons list. ICSGP, XLF, Snow, Lyndale, Palo Alto. They all went out at resistance, out at upper Bollinger, out at intermediate resistance, upper Bollinger, out at 97, which was resistance, upper Bollinger out. So it was a nice week. Had nothing to do, the amount had nothing to do with me. I found these that looked like they were good setups based on the horizon criteria. And then we had a nice, CPI helped us out. Let's just go take a look at a few of these and see what we got. And maybe get this up. And GP, I'll get that going and I'll come down and I'll let you guys in. So CSPG came on the list at about 79.65. If it dropped, I can't remember if it was probably here. It popped up and came up, hit the Bollinger Band, and that's where I got out in the upper Bollinger Band because it was so close to the resistance level. I'm like, I don't know if it's going to play it or get past it. Again, it did get past it, then it went sideways. So now it's playing, sideways above the resistance, which becomes support. You've got some cells up here. You can see it comes up, touches the cells a couple of times and gets out. But with this one, I wanted to take, I think we got $2.13 a share out of that one. And again, it's going sideways now. So when it goes sideways, like over here, you never know what's going to happen. So take your profits and run is what I do. Follow your trading guidelines. Let's look at.
Did the Scholastic help you make that decision?
What's that?
Or did this Scholastic, the SS, help you make that
Yeah,
decision?
I mean, these always do. The issue with these, the Scholastics, when they get up here at the top, is that's the top. So they're both, they could go for a long time, and just kind of crisscross here. So unless I saw, the percent K line really go down below the percent L, okay, or the percent D, this could just go on forever. So that really didn't have a play for me because that was right here. And, we had an RSI that went up. We had this, we had a MACD going up. This is what made it for me. The Bollinger, I was either going to do the Bollinger or the intermediate resistance line. And I chose the Bollinger. So that's where I got out, and I'm happy with that because you can see I'm up, it's up a little above, but again, this intermediate resistant line gives me fits. And so I just get out. Palo Alto Networks. This is what Paul was talking about. See, Palo Alto got in, rode it up, and then when it hit the Bollinger Band again, that's when I got out. I've been really using the Bollinger Bands, especially in these markets that are kind of crazy. If I get above it, get above my cost basis, I'll just use it. And I don't care. I'm not trying to hit the tops or the bottoms. Then, earnings came out too. So that was another, reason why I wanted to get out, because I want to get out before the earnings. And then you see what happened at earnings, then we dropped down. Now we're popping back up. But again, at the time I got out, everything was looking good on the oscillators, but this is what I didn't want to do is this earnings. So earnings were 56 cents.
So I've been wanting that stock for a long time as part, a little piece of my core position.
Yep.
And what I did was, it did bad on earnings. So that next day it cratered and I bought it at 237.
Yep. Right here, support 237.30.
Yeah.
And you can see, look at this. I mean, go back when you were doing that, Paul, go back and look.
That's what I did.
Yep. That's what you got to do.
Yeah. Yep. And I'm like,
that
wow.
Helps you out. 8 out of 10 times that'll do you well. And then you always have the lower Bollinger, if you really want to, try to get a little more. but you like this company, so that's a case where you used it to get in for maybe more of a long-term hold, huh?
Exactly. I bought not a swing dollar amount, a bigger amount, because I like the stock. So I wanted to core position and keep it for a little bit. So,
Yep.
Excellent.
Let's go to snow. So snow, look at this. So the reason that I got in here at snow is I was just looking at this line here and I'm like, okay, should I get in and hit it? We're above the 200 and we kept closing above the 200 here and here. Once we closed above it, for me, that was confirmation. I went down, the MACD's up. I had a crossover a little bit on the stochastic. We were above the RSI. Got in, went up, hit the Bollinger Band, boom, out. So that's where that happened.
Well, that's Monday, right?
Yeah.
That's Monday.
1, 2, 3, 4. Here, yeah. So that was a quick one. But again, I use the Bollinger Band. You can see, and here's where some cells were up on here. That's just today. I don't recall where the cells were, on Tuesday. But this line will move. All these lines will move based on, the 9-day kicks off on the 10th day it kicks off the first one and adds that in and divides it up by 9. So that's how that works. Let's go look at the end of it. Go ahead.
On that trade again, you just put a loss limit. You didn't put the gain
on the snow trade. We go back to
it. On the snow trade. Did you sort of like the Google? You just put a loss in there and you watched it.
Normally, what I'll do is I'll just trail up with the loss. Once I don't remember what I did on this. I think I just left the loss. I think I went in and I hit it when it hit the upper Bollinger Band. I can't remember if I no, I did put a limit on that. I put a limit on the top side.
Okay.
Now this here, this was not the resistance level at the time. It was above this. Right. So resistance came down on today's chart, from 4 days ago.
Thank you.
So, yep. Let's look at the below 200 chart. Where are we here? Grab that one. This one did well today too. All right, let me pull this up for you guys. This we still have Mr. Car Wash, which is interesting. That came out of nowhere, but we've had that on here since last week. LKQ, I think, came on Tuesday or Wednesday, along with AHR. These aren't doing as well. Okay, I'd have to see, if they've hit this, then you would have been out, at the support level. Basically, if it had gone below that, the RSIs were down. Mr. Car Wash is still doing pretty good, for a small little stock. Today, CAT went up and hit resistance. Okay, so we'll take a look at CAT, but it was a pretty good week just on the, and again, when you have a market like we had that went up on CPI, it's a nice bonus for a swing trader because it gave us a lot of this that we probably wouldn't have had, in a regular market.
So on Mr. Car Wash, I mean, it hit. Yeah. We could have got out at the Bollinger Band, or if you look at the trade, it surpassed the Bollinger Band.
Yeah.
So why are we still in it?
Well, because on this one, it's such a small amount of money, and let me get you. I mean, we're talking on 100 shares, which is what I based it on.
I couldn't get in this one. I want
that much, and then it came up. I'm like, I was shooting for up here, and I look up here and I'm like, this is where the upper resistance level is. So I wanted to ride it as much as possible, and it didn't go past. So here's what I'm really targeting right here, where these cells are at 768. We'll see. I'm above here. I would probably set, this will probably pop down, hit the 9 at some point if it goes down. Let's look down here. Still good. Seeing a little bit of a roll here, not much, but that's because of, today. So, I mean, I'm going to keep this probably on over the weekend and then set a limit somewhere over this guy right here. Or, if you want to be chancy, you're up. It's not that much money, So, do you want to go up and try to hit 768, or you want to come down and get out right before 675 when you're in
So when you weigh in the price, you say it's not that much money, but it could be, I have
Well,
my
and
corp,
see,
yeah.
well, I mean, for me, I'm assuming on the paper trade, we're only doing 100 shares just for consistency.
Right. So if you say that's just indicating that you're risking less, so you'll roll the dice more. Is that what you kind of mean?
Potentially, yeah.
Okay.
Yeah. Yep.
Okay. Just trying to follow your thought process, because I think I would have got out on that one. I mean,
No,
based on,
that's perfectly fine. Yeah,
yeah.
for me, and then I look at the other positions there. I'm like, okay, I'm already up so much. You can start playing with house money there too. And take a little more risk if you want to.
Just understanding your psychology, you
Like
look
on
at,
the
yeah.
well, like on Berkshire. The other reason I got out is because I got out and it paid for my trip to South Beach next month. So I didn't want to. I wanted to remain in the positive on my South Beach trip. Um, and I didn't want it to go down, so I had to pay some out of my own pocket. So there's some selfishness in there too, Paul.
Yeah, so
Agreed.
today I had like 3 open positions, and one of them was a little in the red and 2 of them were in the green. I'm like, or 3 of them were in the green. And I was like, I'm just going to close these because I'm not going to worry about them. And
Yep.
even though, some of them, one of them still look, or 2 of them still look good, I could have held on to them, but just to put your mind at ease, I don't have to worry about them, kind of thing, or pay
Yeah,
for
I would
this. I
rather
made my
have a
2%.
gain. I'd rather have a gain than a loss any day. And even that one was 3 cents. And I'm like, a gain is a gain. It's $3. I can buy a beer at the local bar this weekend and it's paid for. This was Caterpillar. This one triggered today, and we got in back here right after it had basically a close above the 9. We got that, came up. Actually, this is where we gapped up and we closed above the 200. I'm like, okay, well now I got new support there. Came up, missed the seller there, missed it here. Today it hit right on the where the sell limits were and got out at that point. You can see it's sitting right there. There's a Bollinger Band right above it. And so that one we got out about 13.32 a share from here to there. See, those are the ones that get a little
Nice one.
pricey on 100 shares, Paul. That I'm like, okay, I'm dealing with $13 a share on 100 shares as opposed to 32 cents on 100 shares.
I usually put the market in with the price, like, okay, swing trading, I'll swing trade 500 or 1,000. Doesn't make any difference. That's the amount I go in with. Not
Right.
like 100 shares is, like you're saying.
I just
I
do
go
that
with
for
the dollar value.
I do that for consistency because it's a learning. The paper trade portfolios for learning purposes. So that's just something I keep standard. But it's up to you. Other people don't have the money, right out of the gate. Younger people to do 100 shares of Caterpillar at 253 a share. But
That
you
was a
can
good
do
one.
maybe you can do it. Yeah. This one worked out well for Caterpillar, and again, thank you for. But look down here. You're seeing what's happening down here. Stochastic. We're seeing we're hitting. That's why the sell limits are here. And look, this is another thing. See where the sells are? They're right under the Bollinger Band. So everyone else is seeing the same thing we're seeing. And so they're putting majority of the sells right under there. So it'll come up and hit before the Bollinger Band and they get out. Okay. And you see, we haven't hit the Bollinger Band yet. So again, that was a pretty good one on that one.
Caterpillar's in the Dow, correct?
Yeah, they are.
I always look at John Deere too when I look at Cat, because they ride together. So
Deere is very high tech because I rode in a brand new Deere tractor I showed Trent, and that thing ran itself. Yeah, here's Deere. So Deere just got above the 50. Got about a good oscillator action here, and it's above its resistance level too. So that will turn into support, and we'll see what happens. It's following its Bollinger Band up. Here's where the sells are. It's under the 200. Let's look at like Paul was saying. I go and I look at I look ahead on the weekends to the sectors to see where the money's flowing. And Move on here, X. So this is today, okay? In the energy sector, you can see, has been down since the middle of October, down, down, down. You can see the channel it's in. And then today, the price action is now above, it's above the 9, and now it's above the 200, okay? It's coming right up on the 20. So I will go in. I'm looking at this. I'm saying, okay, so here's the energy sector. We're starting to see a little life in the energy sector. Here's the MACD doing a little crossover. We got the stochastic crossing over. Let's go take a look at, either you want to hang around in here. You can see back here that the 200 was a nice level of resistance or support. I mean, at this point, if we can get past it, it's been resistance. If we can get past it, we might be able to see a pop. So I go back in and into the index. Let's. I think I wanted to show you the 6-month chart. Yeah, I did. That's why I have all this in there. There you go. You can see back here, it looks almost the same, except we were a little further above on the 9. But once we got past the 200, it kind of tested it a little bit, tested it. But once it got past it, wrote it up. Again, got the 9. But I'm seeing the same kind of thing here, and we'll just have to watch it. So I'll go back into the index and find some stocks just to see what's going on. So this is one I like to watch, Murphy Oil. And you see with Murphy Oil, this, I think I was in on some of this over here. Murphy Oil came up, got above the 200. Here's your one candle above, came down, dropped back down below the 200, came up, got above it again, and just rode, basically the 9 all the way up to this point here. That would have been a nice swing. Came back down kind of sideways to down, came back up during the October energy boom. And then, we hit November. But here's Murphy Oil, and you're looking at Murphy Oil is above the 200, and it's going to close above the 9. So, this is how I start looking at things for either the below the 200 list or the horizon list. I'm looking for this downturn. I'm down here looking to see, okay, well, we don't quite have confirmation on the MACD. Of course, the day's not over. And I'm seeing it's coming right up on the upper channel that it's been in. We'll see if we can get any suction out of it, or any friction out or traction out of this and move this up higher. We'll see. This isn't something I'd get in yet, but this is something I'd be interested in. So that's how I kind of go and look, kind of like you were saying, Paul, where's this money flowing? It's flowing out of something and into something. Is it going back into energy? It may be, the XLE.
Would Exxon fall into that same bucket?
Yeah, you could look at Exxon.
Yeah.
I think I actually looked at Exxon, and I didn't. I used Murphy instead. I don't think Exxon quite. Yeah, Exxon's right here, but here's our 9. We'd have, or the intermediate resistance. We'd have to get above that. They just had, yeah, okay. So see, it looks almost like the same chart as Murphy, except Murphy's above the 200. Yeah, the other one I looked at is let's look at SMH, the semiconductor. Let's see what's happened in semiconductors. SMH. So this is semiconductor ETF, and look what happened. Here we are again. This looks like our major indices. Okay, 4 days just hitting on this 9. Now, does that mean it can't go up? No, that doesn't mean that, but it's having some trouble. It's got to get past that. Seeing a little bit of a roll here, tad bit. Still have the 9 and the 20 screaming up. But we'll see what happens. So then you go and say, well, let's go and look inside the SMH. Let's look at NVIDIA. That's the big one. I bet it looks the same. Yep, almost the same, except the 9 is a lot closer. Okay, and to the resistance level. So this line gets closer to that line. It's going to bust one way or the other. But again, I'm seeing a little bit of a flattening here. That and that are just, they're at the tops. So I'm looking at, just looking at semiconductors, they're going to have to get past that line to get another run for me to be interested in it. But they've had a nice run so far, along with the technology. And then the last one I'm looking at is, let's just look at some that were on the dumpster list. XBI. This is your biotech. So biotech came in and it's had a bad kind of a downward roll, came back, went sideways, and now you're seeing it above the 9, still below the 200. Got some cells right above it. Now it's playing with the 50, and see if that'll remain as support, and a nice Bollinger rolling up. So this has kind of turned around since Monday too. So here was Monday. This was on my dumpster list. Another one was ALB, was on my dumpster list. So these will either move up or stay on the same. So here you can see last I looked at this, 1, 2, 3, 4. This is where it was on Friday. So I looked at it. I'm like, okay, this is a dumpster, but look, I've seen a little bit of maybe there's a crossover in the MACD. Okay, I don't see anything there, nothing there. And you can see now this week it's popped above the 9. We've got a crossover the MACD, a crossover the stochastic, and the RSI is still below the 50. So this will be now moved up probably to my under the 200 list because it's met that criteria. And you're seeing here's where the cells are today. So that's how I move between my different lists to get from something like this that might start doing something like that. But this was quite a long downturn here for ALB. And then let's look at, we talk about treasuries. And we'll see if there's any life in the old 30 or 20-year TLT. And you're starting to see some. Remember last week I said I'm watching this, and 1, 2, 3, 4, 5. Here's where it was last Friday when we looked at it. It was right under the 50. Came down, bounced off the 9, went up to the Bollinger Band, came back to the 9, and now it's riding. You've got some cells right here, but this may be a turnaround for TLT that they've been waiting for. It's been a long dip down, but it's got some room to run if it can get past these levels. So keep an eye on that one. That's all I had. Sorry I took up all your time, but anything else you guys want to look at, talk about? Has this been helpful today?
Absolutely. I mean,
okay.
I noticed the energy sector is down. So
Yep.
You're keeping an eye on, you're going to look at what stocks may be in that energy sector that maybe have a trend. So that's where you go to, as well as the XBI, right?
Well, these are just examples of what I've been watching. So I'll go through the 11 sectors of the S&P. Plus, I have several other sectors like solar and agriculture and others. And those actually go on my list. They either end up in a dumpster below the 200 horizon or the watch list. Those get in there. And then I look at those and say, these are the ones that are in the dumpster. What stocks are in the dumpster that look good? These are the ones that are under 200. What stocks within some of those sectors look good, to be in that list? And that's kind of how I go and I find these stocks. But again, we want to watch these go down, and then we want to see consolidation, and then see if it can, get some traction and start getting and hitting our oscillators. And these are where we want to focus on these levels here where the traction's going in the upward trend, and then we got to determine is it going to continue to go, or is it going to hit this line of resistance here and head back down? And that's why we use the oscillators to kind of give us a little bit of a understanding of where that might be.
Do you recall, might have been 2 or 3 weeks ago, or even a month ago, where you went through an ETF for each one of those sectors, or perhaps the tickers were for the sectors themselves? And
I
pretty
did
much
do that,
yeah, and pretty much every one of them was under the 200-day.
Yep.
Those are I'll say, one of the places that you start to research opportunities, I'll say. And then you would go into what makes up those sectors. Okay.
When we started this week, there were 7 sectors out of the many that I look at that were above the 200. So I bet there's probably a lot more when I look at them tomorrow. My whole process is lazy. I'll look at it over the weekend. I'll get my list of the ones, there's so many stocks. I'm going to look at the ones that I want to focus on. I put them on my list, and those are the ones I watch all week, as you see, and then they go off the end, and then I start over. So I don't go and every day do the same thing and search through everything. I don't do that. I find the ones that interest me, and then I watch them, and that's the process that I use. So that's what you're seeing when I do it. And sometimes I'll go in and I have some other indicators that I look at that'll show me a stock of interest, and I'll go in on the under 200 on a Tuesday or Wednesday. If I find one, I'll throw it on there. I think, Paul, you asked about one at one time. And yeah, I said, yeah, I think I threw it on Tuesday or whatever. So watch the list every day. They get updated in the morning as far as resistance and support levels. And then if I see something, I'll throw a new one on there too.
Oh, it's a lot of fun. I've been looking forward to those recommendations, and I love comparing it to, stocks that I'm familiar with, stocks that are going up, stocks that are going down, and understand the correlations. And
what
to
I
me, it's
like too
becoming quite a hobby.
is when, especially you, Paul, and Farmer Bob, and several of you, when you come in and you offer up stocks that we look at that I don't get to see. So it helps me out too. Like, oh, I didn't see that one, and I'll just say, well, this is what I see, and then I like it when you guys say, hey, I got out of this, and Margaret did too. Margaret said, I made $1.45 a share on this, and I love hearing that too, because that's when you get the fireworks, congratulations. And I like putting that out.
Oh yeah. I think Farmer Bob had put TNet. That was a good one
Yeah.
that he found, and I made a little money off of that.
Mm-hmm.
And
So the whole idea is to help each other. I can't find them all, but if you find them, put them up. Well, I'll look at them and allow everyone else to see, and based on their risk tolerance and their trading plans, we can all make money together and try not to lose anything. That's the name of the game.
oh yeah,
And it is fun. This week was fun.
Yeah, this week was fun.
I'm really curious. I'm really curious to see how next week is going to play out, especially with today being OPEX day, big OPEX day. Are we going to see continue move higher, or is the floor being pulled out?
I think it's going to be very subdued because it's a holiday week, and
That's true.
You're going to be done by Wednesday. A lot of people do leave town, the traders and all that. So
Yeah.
I think the volumes are probably going to be lower. I don't think there's any big news out next week. I just think it's going to be, we're seeing the charts go sideways. I think we're going to continue next week sideways. I think they're open on Friday, maybe half a day. So
yeah, they are.
Again, next week we're not going to have a Zoom meeting. I think I'm going to go to a football game on Friday. So
what are you going to see?
What's that?
Local town or for professional?
Nebraska and Iowa play the day after Thanksgiving.
Very cool.
Yeah.
Cool beans.
So anyway, so no Zoom next week. I'll put out a list Monday morning. I'll update all the list with what I find. Should be interesting. Use your trading plan. Be careful. And take your profits and reduce the amount of losses, and you should do well.
Pay for your turkey.
Yeah, well, that's the way I look at it. Every dollar I make, I don't have to, worry about what the price of hay is.
Right. There you go.
Hey, Mark.
Yeah.
Hey, with your list that you're putting out on Monday, is it when you put it out, are you like looking at the holiday too, saying, hey, put your limits out there, but be cautious of the holiday, or are you just like, hey, here's your list and let it run?
Well, no, I anything that's on the list is just things I see that either match or closely match my trading guidelines, and then I leave it up to you guys to decide really what you want to do. But I think that volume next week is going to be low because it's a 3-day week basically for trading, and I don't know of any major CPI, PPI, any of that stuff that's coming out. We're pretty much done with earnings season. I think people are just going to wait until the following week for volume to be there. Now, it doesn't mean you can't find some value in swing trading. I'll look for them, and then I'll put the list out. But just be cognizant that it's going to be kind of probably a slow week.
Typically it is
Thanksgiving. Yeah.
Yeah.
Gotcha.
When I was in the business, we did self-directed trading, a lot of call center. It was really slow that week, just in trades and calls and everything.
I think you were in some of the correspondence, Mark, right? On Discord.
What's that?
Mark?
Yep.
I think he was on some of I want to say he was on the correspondence. But anything go ahead.
That's a different Mark. My call sign is GBL.
No, I know yours.
The other one's Mark. 52 or something.
Yeah,
Yeah.
520,
Yeah.
52 something.
You
Yeah.
can't let anything ride. Or is it Jason who spoke? Is it Jason who just asked that question?
That was Jason, I think.
Yeah, I would say just,
Yeah, that's
I
me.
wouldn't let anything ride, Jason. You have to be ready to pull the trigger either which way.
If I find something on Monday and I get in, I'll be out by Wednesday most likely because it's a long weekend.
Yeah.
That's what I want to hear. All right.
Yeah.
That's some good guidance,
Yeah.
on these. No, that's perfect. Thank you.
Yeah. And again, there were times this year where the market was so bad for swing trade, we sat out for a week or two,
I
and
was
that's
just
what you do. You sit there and you go, okay, I'm making over 5% in the treasury. I'm good with that. And it's kind of nice to get a little vacation sometimes away from this because it can become consuming. But again, I always say, let the market come to you. Don't force the market because every time you force the market, you're going to lose. At least I always do.
yeah, it's a good point.
Yeah, sometimes psychologically, you're trying to make something happen and it's just
Yeah.
not there. And
Yep.
sometimes I find myself, geez, I want to buy this. I want to buy this. And I just said, you got to walk away and say, I
So
already had,
that's when you go to the chart and you say, okay, let's just look at this logically. Is this a good trade at this point?
Yeah.
No. Yeah. And why? Look at, again, I use, basically 4 moving averages and 3 oscillators and the volume. And those are my gauges on my little Cessna that I fly. I'm not flying a jumbo jet. I'm just flying a Cessna, trying to figure out, how to land and take off without crashing. So,
All right,
and
guys.
everyone else has different. Trent looks at different things and different stuff, and then so whatever works for you works for you.
At the end of the day, it's about keeping the money, not losing
It
it.
is.
All right.
Yeah, don't let the man
Hallelujah.
win. Yeah. All right, guys. Well, you guys have a good weekend, and we're not having a Zoom next week, so have a good holiday.
Yep.
We'll still be on the Discord Monday through Wednesday. I probably won't be Thursday because I'm gonna take that day off, and Wednesday or Friday too.
Mhm.
I probably won't be on it, but I'll get the list out and good luck in a short week. If you do anything, I may not do anything. It just depends on what I see.
Awesome. Thanks, guys.
great.
All right,
Thank
guys.
you.
Talk to you later.
All
Happy
right.
Thanksgiving.
Yep.
Later.
See y'all
Bye,
later.
guys.